Hello guys, today we'll be starting with the next topic in our dissolution of partnership firm, that is insolvency of partners. Now, we'll be starting with first problem, that is 26th problem, page number 267. Now, let us go through the question so that we'll get a clear idea how to solve the problem. X, Y, Z are the partners sharing profits and losses in the ratio of 4:2:3 respectively, and they agreed to dissolve, and you have balance sheet as follows: liabilities and assets. Now, next you have the data regarding realization of assets, and all the liabilities were paid off. Next, the cost of realization amounted to 300, that is realization expenses. The crucial part of this problem, that is Z became insolvent and rupees only 492 was recovered from his private estate. That means what? Z is an insolvent partner in this question, and he is capable of getting only 492 rupees as cash out of his private assets, that is on the sale of his private property. What we have to do in this question? We have to prepare necessary ledger accounts in order to close the firm, and what rule we have to apply? That is Garner versus Murray rule. Okay, so we shall go to solve the problem. So what are the accounts which we have to prepare here? Same basic accounts. One is realization account, partners capital account, as well as cash or bank account. First we shall go to preparation of realization account. Now, realization account, it is same way you prepare: transfer of assets on the debit side, transfer of liabilities on the credit side. Next, assets realized on the credit side, payment of liabilities on the debit side. Next, realization expenses, if you have any, you have to record it. Afterwards, balance the realization account. If you get profit on realization account, you will record it on debit side. If you get loss on realization account, you will record it on credit side. As you have loss on realization account, you are recording it on credit side. That is 22,050 rupees. You are dividing it in their profit sharing ratio among X, Y and Z. The next account which we will be preparing is partners capital account. There is only difference in preparation of partners capital account. Now, same thing. Balance, you will be getting it X balance, Y balance and Z balance. Next, profit and loss account, distribute among them. Reserve fund, distribute among them. And whatever you have realization loss, transfer it to debit side. If you had profit, you will be transferring it on credit side. Now you have loss, so you are transferring it on debit side. Next, realization loss, amount equal to realization loss. Solvent partners X and Y, they will be getting cash equivalent to realization loss to the business, that is 9,800 and 4,900. Is Z capable of getting 7,350? No, he is capable of getting only 492 rupees. So by cash 492 rupees. Now leave certain 3 to 4 lines space, and next we will be going to preparation of working notes. Working note 1, 2 and 3. Now, working note number 1. What we have to do in working note 1? It is preparation of ascertainment of capital deficiency of Mr. Set. How do we ascertain this? Take first debit side total of partner Z. Debit side total is how much? 7,350. And credit side total of Z. If you take total of credit side of Z, you will be getting 4,742. So debit side total minus credit side total. So capital deficiency is how much? 2,508 rupees. This 2,508 rupees, it should be bought into the business by Mr. X and Mr. Y in their capital ratio. So second working note will be preparation of or calculation of ratio, capital ratio of Mr. X and Mr. Y. So second working note, capital ratio of Mr. X and Mr. Y. First, take down the capital balances, 34,000 and 23,000 of Mr. X and Mr. Y. Add on profit and loss account profit to Mr. X and Mr. Y, 1,500. Next, reserve fund balance to X and Y. So, if you add reserve fund balance and capital profit and loss account balances, you will come to 37,800 as X balance and 24,900 as Y balance. Now, take the ratio among these two balances. Cancel two common zeros. If you divide it with 3, you will be getting 126:8. 83 as ratio, capital ratio of Mr. X and Mr. Y. Now, last working note, that is working note number 3. We have calculated capital ratio. We know what is capital deficiency of Mr. Z. Now we have to distribute that capital deficiency among X and Y in their capital ratio. So what is capital ratio of X and Y? 126 is to 83. So capital deficiency is 2508. So Mr. X will be getting 2508 into 126 divided by 209. How do you get this 209? 126 plus 83, 209. So 1512 is the amount bought in by Mr. X. Mr. Y same way, 2508 into 83 divided by 209, 126 plus 83. So he will be getting, Mr. Y will be getting 996 rupees. Now let us go back to partner's capital account. Now in the partner's capital account, X is getting how much, and he is paying on behalf of whom he is getting? On behalf of Z, Mr. X is getting. So by Mr. X, what is the amount he is getting in Mr. X? 1512 rupees. That is as per working note number 3. Next, by Mr. Y, how much is he getting? Working note number 3. As per working note number 3, he will be getting 996 rupees. Yes. Now come on to the debit side. To corresponding entry we have to make to Mr. Z. Who is paying? X is paying how much? 1512 rupees. Y is paying 996 rupees. Z nil. Now after completion of this part, now you can go for balancing of partners' capital accounts. On balancing, what you have to do, you will be writing it as to cash account, same as we have did in our previous problem, balancing figure. When we balance, you will be getting Z column total as 7350 rupees. Now balancing figure of X column as 36,288 and Y column as 23,904 rupees. So total of X column will be 47,600 and total of Y column will be 29,800. 7,350, 47,600, 29,800. With this we completed our partner's capital account. Now we have to move to cash or bank account, which is last part. So cash or bank account is very simple, as you have prepared it in your previous problems. The same way you will be preparing here. Now you get the balance of cash, that is debit balance. Cash account is showing 500, bank is 3,250, so 3,750. Assets realized, you will be recording. Payment of liabilities, you will be recording. Realization expenses, you will be recording. Now X's loan, you have to pay it back in cash. So by Mr. X loan 2,000 rupees. By Mr. X capital account, by Mr. Y capital account, that is balancing figures in X and Y capital accounts. Next, to Z capital account, Z is bringing only 492 rupees as cash to the business. To Mr. X capital account, that is realization loss, cash bought in by Mr. X, and realization loss, cash bought in by Mr. Y, 9,800 and 4,900. When you take the total of cash and bank account, the debit side and credit side, if it is tallying, that means your problem is right.